For this session, we will talk about your preferential taxation and the different laws or the different items under our tax law, which provides for your preferential tax or preferential taxation among entities, persons, or establishments. So we discuss first what is the preferential tax. A preferential tax is one which costs different treatment on certain entities, activities, or structures for the purposes of taxation. So generally, we have here your National Internal Revenue Code and your other special laws which provides for the taxation of a particular person, entity, or activity. However, out of these rules, we have your exemption to your general rule. So it's like your NIRC and your special laws, which is the general rule. And we have items from your different special laws, which provides for exceptions to that rule. So for example, a corporation should be taxed at 30% corporate tax rate, let's say. However, per another law, this certain corporation is only taxed at 2%. So that is the difference that is the difference or the preferential treatment on that particular certain corporation. So what we need to look here is what is the taxation of that, what is the general rule on that taxation, and what is that exemption on that particular taxation of an entity, activity, or structure. So the following are the different preferential taxes. First, we have your PEZA or Special Economic Zone Act. We also have your Omnibus Investments Code. We have your Microfinance NGOs, and we have your non-stock non-profit organizations. We have your BMBE. We have your registered small-scale miners or accredited gold traders under RR 4-20. We have your Expanded Senior Citizens Act of 2010 and privileges of PWD. So for today, we will discuss items 3 to 8, and we will leave 1 and 2 for your passing class. So again, let's put this in your mind that when we talk about your preferential tax, we have this certain taxation, but this entity or activity is taxed differently. That taxation difference of that particular entity or activity is known as preferential taxation. So let's start first with your Expanded Senior Citizens Act of 2010. So what is this Expanded Senior Citizen Act of 2010? So who are covered under this preferential tax? So the preferential tax applies to your senior citizens. And when we talk about your senior citizens, these are at least 60 years of age. So any person which is more than or equal to 60 years of age can claim the preferential taxation out of this law. By the way, your Expanded Senior Citizens Act of 2010 is your RA 9994. So what are the preferential taxes under your Expanded Senior Citizens Act of 2010? The first is your exemption from VAT. So when we say exemption from VAT, under your receipts soon, when you have a sale to a senior citizen, it must be exempted from VAT. So for example, your price inclusive of VAT is, let's say, 112 pesos. Right? So this is your price, VAT inclusive. So if ever you will sell it to your senior citizen, it should be exempt from VAT. So your price, 112, less the VAT. So that is 12 over 112. So this is 12. So the senior citizen will only pay 100 pesos. This 100 pesos is, of course, net of VAT. Okay, that is on your exemption from VAT. However, aside from your exemption from VAT, your senior citizen is also qualified for a 20% discount on certain purchases. So the question here is, what purchases are qualified for 20% discount? what purchases are qualified for 20% discount. So the purchases qualified for your 20% discount only applies to certain purchases. So what are those purchases? So we have your purchases of medicines. We also have your purchases of uh, services out of professional fees of your physicians or any licensed professional health providing for healthcare services. Also, we have your professional fees on services of medical and dental. We also have your fares. We have also your air transport services and your sea transport services. We also have your land transport services. We have your lodging on your hotels, and we have your restaurants and recreation centers. Also, for your theaters and cinema houses, circus, leisure, and amusements, they are exempted for 20% discount. So, for example, sold 60,000 pesos to a, a senior citizen based on his lodging. Based on his lodging. This 60,000 is inclusive of VAT. Inclusive of VAT. Okay. So what are the preferential taxes of the senior citizen? First, it has a exemption from VAT, and another is a 20% discount on certain purchases. So, what did your senior citizen purchase? The senior citizen purchased lodging services amounting to 60,000 pesos. And the 60,000 pesos is inclusive of VAT. So, how much is the net amount paid by the senior citizen? To get for the net amount paid by the senior citizen, first we get for the price inclusive of VAT, that is 60,000 pesos. We remove the VAT. This is 12 over 112. We remove the VAT. That is 12 over 112. 12 over 112 of 60,000 pesos is equal to 6,428.57. So this is the price net of VAT. So we have 53,571.43. And then you will remove the discount. The discount is 20%. So 20% should be based on the price net of VAT. Okay? 20% of 53,571.43, that is 10,714.29. We have your net amount paid by the senior citizen. So 53,571.43 less your 10,714.29, we have 42,857.14. Okay? So that is the effect of your exemption from VAT and the 20% discount on certain purchases. Sir, what is the effect of that particular preferential taxation as to the record of the seller? So this is the effect to the buyer, which is the senior citizen. How about on the seller? What is the effect? The seller should record a revenue amounting to 53,571.43. This revenue must be recorded net of VAT. Okay? And then you will record the cash, which is 42,857.14. That is the amount you have received out of that senior citizen. And then finally, you should record your sales discount. Okay? Sales discount, which is equal to 42,000, no, 10,714.29. 10,714.29. Okay. Now, in the presentation of the seller, this is how you do it. So the revenue should be recorded at gross. And then on the expenses, you should include there the discount to senior citizen. So this discount to senior citizen should be presented in your expenses. Okay? It should be presented as deductible under your expenses, itemized deductions. And your revenue should be presented at gross. Revenue should be presented at gross. Again, no problem on the part of the buyer. We already talked about it. How do we apply the preferential taxation under your expanded Senior Citizens Act, RA 9994, on your buyer, which is a senior citizen? First, I told you, you remove the net of the VAT. So the price, you deduct the VAT. So in short, this is the price you multiply to 100 over 112 to get for the net of VAT. And then finally, to get for the amount paid, you multiply this to 80%. Sir, why 80%? Because that is 1 less the 20% discount, 80%. Clear? Okay, that is the net amount paid by the senior citizen. If in case that is the question. But if the question is on the side of the seller, how do we treat it? On the part of the seller, you will record the cash amounting to the net amount paid by the senior citizen. You record also a sales discount, which is equal to the 20% based on the amount net of VAT. And then finally, you record the revenue. But the question is, how do we place that under the income tax return of the seller? On the income tax return of the seller, here is what you should do. First, you record the revenue at gross on the ITR, and you record as expenses the discount to SC. Take note, the revenue should be recorded at gross, not netted. Okay? Not netted. And take note of the effect of the discount to senior citizen. The discount should be deducted as an expense under itemized deductions. It is an itemized deductions. Therefore, guys, if you are using OSD, no claim for the 20% discount. Clear? Okay, again, the expenses should be treated as an itemized deduction. Therefore, you will place it under your expenses discount to senior citizen. But if you will use OSD, there will be no claim for the 20% discount. If you will use OSD, there will be no claim for the 20% discount. Are we clear on the treatment between the buyer, the senior citizen, and the treatment as to the seller? I hope we are clear. As to the buyer, take note of the exemption and the 20% discount. As to the seller, take note of the effect. It should be recorded at gross, and the discount is reported as an expense under itemized deductions. If in case there is no itemized deduction and you opted for OSD, there should be no additional presentation for the 20% discount. Again, if you opted for OSD, there's no additional presentation for the claim of the 20% discount, and the revenue will still be at gross. Okay. So if we try to outline it as a whole, first we have here your itemized deduction and your OSD. So the revenue under your itemized deduction should be presented still at gross, but the OSD is still presented at gross. How about your deduction, which is your discount to senior citizen? This is your deduction under your itemized deduction, while your OSD, it is not presented separately. So it's still 40% OSD. I hope we are clear as to the treatment to the seller of that particular exemption of a senior citizen. Another preferential taxation given to your citizen is your exemption on income tax. So this exemption on income tax is based on the rule that if ever the SC is a minimum wage earner. Okay. So as a general rule, a senior citizen actually is required to file tax return. Required to file tax return. Exception to this rule is that the senior citizen is MWE or the senior citizen has uh, net income or taxable income which is below the threshold, okay? Below the threshold amount. So if ever that is the income of your senior citizen, then they will not file a tax return. They are exempted for income tax. Take note, guys, we have a qualification here. Your MWE must be present in your SC. Therefore, if it's purely SC is still taxable. But if that is SC and MWE, it is exempted. Clear? Okay. Purely SC, subject to income tax still. SC plus MWE, exempted. Another incentive provided in your senior citizen is the 5% on utilization of water and electricity. Take note, there are only certain services and purchases which is subject to the 20% discount. And 20% discount does not apply to your utilization of water and electricity. What then applies as a percentage of discount for your utilization of water and electricity? That is your 5% discount. 5% discount. Okay. But but not all utilization of water and electricity is exempted. Take note, the SC is exempted. The SC can claim 5% discount on the utilization of water. General rule, 5% discount on water and electricity. Exception to the rule, no discount if ever for water you have exceed 30 cubic meters. Okay? For water, you exceed 30 cubic meters. And for electricity, you exceed 100 kilowatt hour. Again, there is a 5% discount on your water and electricity for your senior citizen in case they will not exceed the threshold amount. What is the threshold amount? There is no discount for water if ever you exceed 30 cubic meters, and for electricity, 100 kilowatt hours. Okay, take note of this. The 20% discount on your purchases applies only to the senior citizen. Applies only to the senior citizen. But the 5% discount should be applied per household so long as there is the senior citizen. Okay? 5% per household so long as there is a senior citizen residing therein, regardless on the number of senior citizens residing therein, so long as there is your senior citizen. Take note, 20% discount only to the SC, 5% discount to the household of the senior citizen. Okay, let's illustrate that only to the SC. So for example, you sold 60,000 A SC for lodging. So the 60,000 is for A is senior citizen, B not senior citizen. Okay. The 60,000 now is for A, the senior citizen, and B, not a senior citizen. What you should do is divide them to the number of persons who utilize that logic. So there are two persons, A and B. So for A, you multiply it to 100 over 112 multiplied to 80%. Why? Because a senior citizen is qualified for the exemption from VAT and a 20% discount on certain purchases. Okay. So we have 30,000 times 100 over 112 multiplied by 80%. So the amount paid by the senior citizen is only 21,428.57, while for B is still 31,000, total of 51,428.57. Take note, it is only to the senior citizen which should claim the 20% discount. So in this case, we have a senior citizen together with a not senior citizen. The senior citizen will claim the discount, but the not senior citizen will not claim any of the incentives provided under your Senior Citizens Act. Clear? Okay. So how will you claim of these discounts? So we have already talked about this on the part of your seller. It will be treated as expenses deductible under itemized deductions. Furthermore, the NIRC provides that private establishments employing SE shall be entitled to additional deduction from their gross income equivalent to 15%. You have already known this one and discussed this one as part of your special deductions before. Special deductions. So these are certain deductions provided by your special laws. And under special law, they are provided 15% discount, 15% additional deduction if in case they will employ a senior citizen. So for example, senior citizen, the compensation total is 130,000. Aside from that, they can claim additional deduction, which is equal to 15% of the 130,000 pesos. So 130 multiplied by 15%, we have here 19,500. 19,500. Okay? That is for your Senior Citizens Act of 2010, RA 9994. Of course, for non-senior citizens, what is the effect? They are not exempted from VAT, and at the same time, they cannot claim for any discount. Okay? For senior citizens, they can claim for VAT, they can claim for discounts, while for non-senior citizens, they are not exempt from VAT, so they are still VATable, and at the same time, they don't have any discount. Expanded Senior Citizens Act of 2010. We go now to your Magna Carta for PWDs or RA 7277 as amended by RA 1075. 1075. Okay, so we go now to your preferential taxation of PWDs. So who can claim for the preferential taxation of your PWDs? Of course, it is the PWD. And what is the definition of your PWD under the law? Under the law, PWD is known as those suffering from restriction of different abilities as a result of mental, physical, or sensory impairment to perform an activity in the manner or within the range considered normal for a human being. Normally, before you can claim for a PWD or you can claim to be PWD, there must be first an examination from a medical doctor, and there is a certification that you are a PWD. Thereafter, you should register to the city or to the municipal health, and you can claim your PWD card. So for your senior citizens, they have your senior citizens card. For PWD, we have your PWD card. Aside from this suffering of mental, physical, or sensory impairment, PWD also includes those who have any long-term mental, intellectual, physical, sensory impairment. Right? So long as they should hinder their full and effective participation in society, as differentiated from your normal human being, then they can be considered as PWD. Now, what are the incentives or your preferential tax treatment for your PWDs? So your PWDs are exempted from VAT, so they are exempted from VAT, and aside from that, they can claim 20% discount on certain purchases. So this is the same with your senior citizens. In the exemption that they cannot claim the 5% discount. They can only claim exemption from VAT and a 20% discount on certain purchases. Now the question is, what is the treatment of that discount? So again, as we said a while back, if we try to look at it, we have your itemized deduction, and then we have your OSD. So under your revenues, it should be represented at gross amount. And then under your deductions, we have your discount. Under itemized, it should be included. under OSD, it should be excluded. Take note, it can only be included as a deduction under itemized, but it cannot be included under a deduction on your OSD. Furthermore, the NIRC provides that establishments employing PWD shall be entitled 25% of the salaries and wages paid to PWDs. Take note, the special deduction for your senior citizen is only 15%. But for your PWDs, it is 25%. Because guys, of course, senior citizens can still render their service. However, for PWDs, since they have this kind of impairment, at some point, of course, they are discriminated by the employers. Therefore, to provide at least an avenue for your employers to at least hire PWDs or to hire PWDs, they are still given additional discount on their salaries and wages paid on the PWDs. This is not discounting the fact that, of course, PWDs can still perform their jobs. But there is that stigma with your PWDs that when they are considered PWD, they cannot perform their jobs. That is not right. So aside from, of course, that stigma, what we do based on the law is that they are still given preferential treatments both on the PWD and both on the particular seller and your employer. For the seller, they have 20% discount. For the employer of PWD, they can claim additional 25% discount. For the employer of PWD, they can claim additional 25%. So we were talking about the additional discount provided to the employer in case they will employ EPWD. The special discount, the additional deduction here, or the special deduction here, is the 25% of the amount paid to the PWDs. So for example, the salaries paid to your PWDs is 20,000 pesos. They can claim additional deduction, which is equal to the 25% of the 20,000 pesos. So 5,000. So their total deduction is 25,000. So salaries here is your actual expense. However, we have a special deduction, which is 5,000 on the 25% amount of the salaries and wages paid to PWDs. Furthermore, you know this one, another type of special deduction under income taxation, the cost of improvement of facilities for PWDs, they can claim additional 50% of the direct cost of the improvements or modifications. So for example, you provide a railway there for your PWDs. So normally, businesses which employs a staircase needs to provide for a ramp for your PWDs to use in case they cannot make use of the staircase. So for example, you improve your facility and provided a ramp. So this ramp, the total cost of your ramp here is 320,000 pesos. So aside from 320,000 pesos, they can claim additional 50% of the direct cost of that improvements or modifications. So they can claim 160,000 additional special deductions. Take note, these special deductions were already discussed to you, of course, during your income taxation. So what we focus here is how we treat your discount and your exemption from VAT of your PWDs. Take note, just like your senior citizens, they are only exempt from VAT, but not exempt from your income taxation. So as a rule, as you all know, senior citizens are still subject to income tax, except if they are MWD or they do not MWE or they did not meet the amount of your taxable income. However, for Magna Carta for PWDs, as a rule again, they are not exempt from income tax. So please do not forget that. It's one thing to be exempted from business tax and another thing to be exempted from income tax. Here, only exemption from business tax, that is your another. We have your BMBE Act of our BMBE Act or Barangay Micro Business Enterprise, which is your RA 9178. So what is this RA 9178? So under this BMBE Act, your Barangay Micro Business Enterprise shall be exempt from income tax arising from their operations. Okay, so the question is, who are qualified under this BMBE Act? Of course, those qualified are your barangay micro business enterprise. So what is your barangay micro business enterprise? Your BMBE refers to any business entity or enterprise whose total assets, including those arising from loans, but exclusive of the land on which the particular business entity's office, plant, and equipment are situated, shall not be more than 3 million pesos. So the question is, what are these business entities or enterprise? So when we talk about business entities or enterprise, there is no qualification here. So when we say there is no qualification, it can be a sole proprietorship, it can be a corporation, it can be a partnership, it can be a cooperative. And then when we talk about your total assets, how do we compute for your total assets? Right. To compute for your total assets, it is composed, of course, of the total amount of your properties, whether personal or real. Again, when we talk about your assets, this is equal to your properties, whether personal or real. The properties of your BMBE, whether personal or real. You remove any land which the particular business entity's office, plant, and equipment are situated, and those properties owned and used, or even if not owned but used by the BMBE or its affiliates. So it is not only owned but also used. So when we talk about this use, as you all know, the presence of control under your PFRS 16, which is leases. So for example, so the following are the assets of a business enterprise. So we have here cash of 300,000. We have here land where the operations is based. We have 2,500,000 pesos. We have your equipment amounting to 600,000 pesos. And then we have here a lease asset amounting to 2,100,000 pesos. Okay. So to determine the total assets of this enterprise, we must get all your real and personal properties, so cash, land, equipment, and lease asset, total of 300,000 plus 2.5 million plus 600,000 plus 2.1 million. We have 5.5 million pesos. And then we deduct your land because we said you remove your land on which the particular business entity's office, plant, and equipment are situated. So this is the operational area. So we deduct the land, which is 2.5 million. So that is the total asset now, which is tested for the BMBE. So 5.5 million less 2.5 million, we have here 3 million pesos. So let's see if ever it passes your BMBE. It shall not be more than 3 million pesos. So this is not 3 million pesos. Therefore, it can be considered as BMBE. Third question, why do we say it is BMBE? Because normally when we say BMBE, it is a barangay-based business. So when we say barangay-based business, the business operations are confined on that territorial jurisdiction or the LGU which focuses on that barangay. And also, mostly of its employees or residents are mostly of its employees or residents or its customers are within the LGU of its principal place of business. Okay? So this micro business is primarily for your livelihood, uh, especially most of the common examples of your BMBEs are your sari-sari stores actually. And they are considered BMBE, and if they are considered BMBE, they are exempted from your income tax or your talipapas, they are considered BMBEs. So one important thing that we look into for your BMBE is the assets of that BMBE. If ever the assets will not exceed 3 million. And how will we check if ever it exceeds 3 million? When we talk about your assets, that includes your real or personal properties, but you remove your land, and you include any owned or used asset. So take note, even if you only use it, but you don't own it, you should include it as part of your assets. And you will subject it to the 3 million threshold if ever it passes your BME. Okay? So what is the preferential tax of your BMBE? So the BMBE shall be exempt from tax for income arising from the operations of the enterprise. So the BMBE will be exempted from your tax out of the operations. The question is, what operations are included in the BMB? Actually, whether it is merchandising, manufacturing, or servicing, these are all exempted under your BMBE. But what operations are not covered? So the operations not covered under BMBE are your services of licensed professionals, services of licensed professionals. Furthermore, any consultancy or advisory or similar services provided by your licensed professionals under the guise of a juridical partnership or personality. Again, licensed professional services for your sole proprietorship is not covered under your operations. Another not covered here is your services provided by your licensed professionals under the guise of a juridical personality in the guise of your consultancy, advisory, or similar services. So consultancy, advisory, or similar services under the guise of a professional services under your partnership, corporation, or a cooperative. So long that is the service of a licensed professional that cannot be sanctioned under your BMBE. Take note of that. As we said earlier, when we talk about BMBE, it does not really qualify. It can be a sole proprietorship, it can be a corporation, it can be a partnership, it can be a cooperative. Therefore, when we talk about your operations, that can either be manufacturing, merchandising, or servicing, whatever type of operation. Exemption is the services provided by your licensed professionals. Likewise, under the guise of your juridical personality, such as your partnership, corporations, or cooperatives, which is providing services for consultancy, advisory, and any other similar activities to your consultancy and advisory. Exemption to this exemption from your income is the income of your passive income and not effectively connected from your operations of the PMBE. So for example, the following are the income of a PMBE. So let's say we have here your income from operations, 700,000 pesos. Interest income from banks, let's say 200,000 pesos. And then you have here prices, 300,000 pesos. How much is the exempt income of the BMB? The exempt income will only come from those income from operations, which is 700,000. Those income subject to final tax, which is your interest income, and then your prices, they are subject to tax. They are subject to tax, which is the final tax. Therefore, problem arises here, guys, because if ever you will be confronted with a problem under BMBE Act, you must know what are the items subject to passive income tax and what are the items not subject to passive income tax or from income from operations. Because if ever the question is, what is the final tax paid by the BMBE? Therefore, you should know the different tax rates under your final taxation. Because if you don't know, therefore, you cannot answer the question. But if ever the question is how much is the exempt amount of income of the BMBE, therefore, look of the total income arising from the operations of the BMBE. Now, how should you claim a preferential tax out of your BMB? I think to my students before, especially under your income taxation, I emphasize to you that if ever you are exempt from taxation, if you are exempt from taxation, this does not operate automatically. Exemption from taxation does not operate automatically. Exemption not operate automatically. You must prove your exemption. Okay. So how do we prove your exemption from your BMBE? First, you should register to the city or municipality and you will be issued a certificate of authority. So what is the difference here? If you still remember before, in a regular business, you just need to file into your mayor's permit, or you must only get a PTR to register your business into the BIR. Because under your COR, it must provide there that you are exempted from income tax. Okay? So for that exemption on your income tax, for EPMBE, you must first get a certificate of authority under the city or municipality, which provides that you are really a BMBE. And the effectivity of that certificate of authority is for 2 years, but it is renewable. Sir, why is it only 2 years? Because again of this threshold. This threshold should be tested always for another after 2 years effectivity of your BMBE certificate of authority. So after that certificate of authority or after the 2 years, it will be tested again whether you still qualify as BMBE or not. Because again, to qualify as a BMBE, you do not need to test your operations. Again, operations is not tested for a BMBE. What is tested for a BMBE is that they have an income that is not more than 3 million pesos. They don't have an income which is not more than 3 million. They don't have an asset which is not more than 3 million pesos. So they will test the asset which is inclusive of your real and personal properties but exclusive of your land. The real or personal properties can be either owned or used. Furthermore, after your CA, you must provide now with the BIR RDO your CA together with your appropriate form for registration. So again, take note of this. If you are provided an exemption under the law, there is no automatic exemption provided under the law. So what you need to do is in your registration, you provide there that you are really exempted. So under BMBE, what is the evidence that you are really exempted pursuant to BMBE Act? So to know that you are really exempted, you must show your certificate of authority under the city or municipality as provided by the city or municipality treasurer, and then present that also to your BIR RDO upon your registration. BMBE Act RA 917. Let's proceed now to your small scale miners or your SSMs or your accredited traders pursuant to your RR4-2020. Actually, your RR4-2020 strengthens your sections 32 and 151 of the NIRC. Also, an implementation of your RA 11256. Right. So that you know why we need to exempt these types of sales. So under RA 11256 for your Gross International Reserves Act. Gross International Reserves Act. So what is the Gross International Reserves Act? Generally, to know if ever we could still print money, or to know if ever we have that strength in our purchasing power of peso, it is dependent on the gold reserves of a particular country. So therefore, to increase our international reserves, especially on your gold, we need to provide certain exemptions on gold. Because what we need to do is that if ever we have a gold, if ever a miner or a trader have a gold, that particular gold must be sold to BSP, so that the BSP, as your main reservoir of your gold, must be must have that gold as an additional reserves of gold. So for that additional reserves of gold, and to entice your sellers to sell that gold to the BSP, then under our RA 11256 and pursuant to our to the NIRC section 151, they provide an exemption to your sale of gold to the BSP. Now, in the sale of gold to the BSP, what happens is that only certain individuals who sells gold to the BSP can claim for the exemption. And who are these individuals? These are registered small-scale miners and your accredited traders. Okay, so who is a small-scale miner? So under the law, a small-scale miner is, of course, a miner which is duly licensed by the Mines and Geosciences Bureau to engage in small-scale mining contracts. So long as you have a small-scale mining contract as provided by your MGB, your Mines and Geosciences Bureau of the DNR, then you are considered a small-scale miner. And who is an accredited trader? So an accredited trader is any trader who buys and sells golds, which is in compliant with the accreditation of your BSP. In short, an accredited trader is a trader of a gold, which is accredited by the BSP, while a small-scale miner is a miner which has a approved small-scale mining contract by the Mines and Geosciences Bureau. What is a small-scale mining contract? I don't know what is a small-scale mining contract actually pursuant to DNR. But what I know is that so long as it has a small-scale mining contract, then you can claim for this. Take note of the exemptions. So under the exemptions on your RR 4-2020 or pursuant to your NIRC provisions under our sections 32 and 151 and pursuant to RA 11256, what we do here as an exemption is exemption on the income tax and excise tax of the sale of gold of the SSM or trader to the BSP. So in short, SSM to BSP or trader to BSP. What is the exemption? The exemption is exemption of income tax and excise tax. Another is SSM to trader and then eventually to BSP. That is the sale of gold of SSM to trader with eventual sale to the BSP. So first, SSM will sell it to the trader and the trader to the BSP. So your question, how will the SSM know that the trader will eventually sell it to BSP? Through the acknowledgement of gold delivery and sale, wherein the SSM, wherein the trader will acknowledge that a gold was delivered by the SSM and will eventually sell it to the BSP. So the trader should acknowledge the sale of the SSM to the trader, and of course, that particular gold will be delivered to the BSP. Take note, the exception here is exclusive, only gold. Sale of gold by the SSM and the accredited traders. Sir, why again gold? Because if it's only gold, that is used to measure your international research or purchasing power of a country. They don't look at other minerals or other jewels or stones. It is purely gold. It is purely gold. So for example, you will be given a problem, a sale of gold to BSP, sale of silver to BSP, sale of precious metals to BSP, sale of gold to other entities, sale of precious metals to other entities. Okay. If that is SSM or trader, sale of gold to BSP, exempt. Sale of silver to BSP, taxable. Sale of precious metals to BSP, taxable. Sale of gold to other entities is taxable. Sale of precious metals to other entity is taxable. Take note, what is only exempt is the sale of gold to BSP. How about if that is non-SSM or trader? Everything is now taxable. Sale of gold to BSP, if you are non-SSM or trader, taxable. Sale of silver to BSP, if you are non-SSM or trader, taxable. Sale of precious metals to BSP, if you are non-SSM or trader, taxable. Sale of gold to other entities is still taxable. Sale of precious metals to other entities is still taxable. Okay, take note, what is only provided as preferential taxation under RR-4 2020 is the income tax and excise tax. Now, question is, how about your business tax, especially VAT? How about your business tax, especially your VAT? What do you know about your VAT again? The sale of gold to BSP shall be exempt from VAT. Sale of gold to BSP shall be exempt from VAT. This is under your train law. Under train law, sale of gold to BSP is exempt from VAT. Take note, what is the sale of gold to BSP? The sale of gold to BSP is without qualification, unlike here, unlike in your RR 4-2020. Who sold gold? It is your SSM or trader. Under train law, the exemption of VAT exemption does not qualify so long as there is a sale of gold to BSP. Okay, please, wag na naman ninyong paghalo-haluin yung nasa utak natin. Pag income tax, excise tax, anong itetest natin? If you are SSM or accredited trader. Pag VAT, do not need to test. It is purely exempted pursuant to train law. What is preferential only under RR4-2020 is the preferential tax treatment as to income tax and excise tax. Only applicable to these two items. Clear? But for VAT exemption, there is no qualification. So long as there is a sale of gold to the BSP, whoever sold that, it is exempt from VAT. Okay, now, how would you know that you are exempted? So in your registration, again, what you need is your BSP certification, need for tax exemption. As I told you guys, for a tax exemption to apply, it cannot be automatically given by a particular business entity or to a particular business entity. What happens here is that for a tax exemption to ensue, there must be a certification. So a while back in your BMBE, we have your Certificate of Authority or your CA. In your SSMs or accredited traders, what is the certification? That is your BSP certification that you are an SSM or an accredited trader so that you can claim for a tax exemption upon registration. Guys, you cannot claim tax exemption after registration. As easy as initial registration, you must claim a tax exemption. What is your tax exemption as easy as your uh, as early as your registration? That is your tax exemption on the sale of gold to your BSP. Clear? Okay. Sir, how about if I already registered? This talks about only prior registration. Wherein before registration, you already have certification. What if you already registered and then subsequently you have that tax exemption? What you need to do now is to update your registration to claim for that tax exemption. In your updating of your registration, before you can update your registration, you will undergo a tax audit. So to know if ever there are any tax liability of that particular SSM or accredited trader. But for you to remove this hassle or to at least not meet this hassle, what you need to do is as early as your initial registration, you must already claim for your BST certification so that you are tax exempted under RR 4-2020 that gives pronouncements based on your RA 11256 section, also section 151 and 32 of your NIRC. Okay? Isa lang ha, sale of gold to BSP of your SSM or trader is exempt. Sale of gold to BSP, whoever that is, VAT exempted under your training. Another is your Microfinance NGOs Act, which is your RA 10690. RA 10690. So who are exempted under your Microfinance NGOs Act, RA 10690. These are your microfinance NGOs. So when we talk about microfinance NGOs, they must be in the operations of your microfinance, and they are NGO. When we say NGO, it is non-stock and it is non-profit. Non-stock and it is non-profit. So generally, if you are a microfinance, you have the primary purpose of micro enterprise, of microfinance products, programs, and services for the poor. Generally, your target market here in your microfinance NGO is for your poor and low income individuals. Okay. And what are the microfinance that you provide? Normally, these are any products, programs, or services provided for microfinancing. Microfinancing because the target is this micro income individuals, your poor and low income individuals. Okay. So what is the preferential tax here? The preferential tax here is your 2% tax on the gross receipts generated only on microfinance operations catering to the poor and low income individuals. So you have here a gross receipts tax instead. So aside from your income taxation, you are subject to 2% gross receipts tax. So not purely income tax, but a 2% gross receipts on your income, only on your poor and low income individuals. For example, you are a microfinance business. Okay. What if you are stuck? If you are stuck, you are still taxable based on our train law. That is your corporate tax rate. If you are non-stock and non-profit, what is the test? If you are non-stock, non-profit, if that is an operation for your poor and low income customers, then you are subject to 2% gross receipts tax instead. But if that is not for poor or low income customers, then you are subject to your normal tax. Okay, so look, if you are in a microfinance business, first you need to know whether you are non-stock and non-profit or you're stock and for profit. For if you are stock or for profit, you are still subject to tax under the trade law. That is your corporate tax rate or your normal taxation. But if you are non-stock or non-profit, take note the preferential tax rate applies only to poor and low-income customer. If your customer is not poor or low income, you are subject to normal tax. Now, how will you claim for that particular exemption or preferential tax rate? To claim for that preferential tax rate, there must be a certificate of accreditation from the Microfinance NGO Regulatory Council needed for tax exemption upon registration. So look at this. BMBE, SSMs or traders, including microfinance NGOs, you need a certification before you can claim for an exemption. As I told you, before you can really claim for an exemption, there must be a proof. There must be a proof because you cannot just automatically claim for an exemption. So what are the proofs? BMBE certificate of authority. SSM or traders, as we all know, there must be an accreditation or a certification coming from the BSP. And then for your MNGO, there must be an accreditation again coming from your Microfinance NGO Regulatory Council. Okay? Take note, there must be no part of your property or income that must inure to the benefit of your officer, member, organizer, or any individual person. That is the rule of your non-stock or your non-profit. If you still remember those rules under your corporate taxation. Under your corporate taxation, you test those non-stock or non-profit. The test is, of course, your operational test. What is that operational test? That it is exclusively devoted on the primary purpose of the non-stock or non-profit corporation. And aside from that operational test, what do we look into for your non-stock or non-profit? That no part of the property or income shall inure to the benefit of that member, officer, organizer, or individual person. I hope that you still remember that in your income taxation. You remember that that particular test. So you actually test your non-stock or non-profit for exemptions. So for your exemptions, there must be first a test on your operations. So operational test. So what is your operational test? That it is purely for the devotion of your primary purpose, and it does not really inure to the benefit of any member, officer, or an individual, etc. Okay? So what do you need to remember in microfinance? Only non-stock and non-profit on the operations to poor and low-income customers that the preferential taxation applies. All other else, they are subject to your normal taxation or your corporate taxation. Okay? And what is the proof so that you can claim? You should have a certificate of accreditation. Sir, guys, if the problem tells you a microfinance NGO is not properly accredited and has operations on poor and low income customers totaling 5 million pesos. What is the amount of exempt in MNGO or Microfinance NGO is properly accredited and has operations on poor and low-income customers totaling 5 million. So that is the gross receipts out of your poor and low-income customers. What is the amount of exempt income? Your answer is zero. Sir, why is my answer zero? So although you are a non-stock, non-profit, poor and low-income customers MNGO, if you are not properly accredited, meaning you cannot get for the tax exemption or the tax preference treatment. Okay? Because again, I told you exemptions that not apply automatically. So if the problem tells it is not properly accredited, your answer should be zero. But if it says MNGO only, if it is silent and it provides that it is only an MNGO, Then you test if ever it is stock or non-stock. Clear? Okay. So the preferential tax here is 2% on the tax on its gross receipts. So gross receipts based on the income on 2% rather than your normal taxation. And the last preferential tax treatment we will discuss for this morning is your exempt corporations or your NPOs or your NGOs. Okay. So when we say NPOs or NGOs, these are nonprofit organizations or non-governmental organizations. So these are your non-stock corporations which are considered exempt. So these corporations are exempted pursuant to Section 30 of the NIRC. Okay. So Section 30 of the NIRC provides for the exemptions of the following. Who? Labor, agricultural, or horticultural organizations, not for profit. Importante lang naman titignan niyo dito sa corporation na dito ay non-stock siya at saka non-profit siya. Okay? Another, we have your mutual savings bank not having capital stock and cooperative banks without capital stock operated for mutual purposes and without profit. So again, non-stock, non-profit. So una, non-profit siya. Pangalawa, non-stock and non-profit. Third, beneficiary society orders or associations operating for the exclusive benefit of the members. So this is only beneficiary of the members. Therefore, this is again non-profit. Another cemetery company owned and operated exclusively for the benefit of the members. Again, this is non-profit. Next, you have your non-stock corporations or associations operated exclusively for religious, charitable, scientific, athletic, or cultural purposes or for the rehabilitation of veterans. Again, exempt. You have your business leagues, chambers of commerce, boards of trade not organized for profit. Civil leagues, civic leagues, or those organized exclusively for the promotion of social welfare. Therefore, this is again not for profit, exempt, non-stock, non-profit educational institutions, government educational institutions, farmers or other mutual typhoons, farmers, food growers associations. In short, guys, all business corporations, which is non-stock or non-profit, are considered exempt corporations. Okay? So what is the exemption here? It covers the income received by the corporations in the furtherance of the purpose. As I told you, just like your MNGOs, what you test is the purpose. What you test is the purpose or your operational test. Operational test. That it is purely devoted for the operations of the corporation, whatever is the primary purpose, whether it is from 1 to 11, whether it is from 1 to 11. Hence, take note, guys, that income of whatever kind or character from any of their properties, real or personal, or from any of their activities conducted for profit, regardless of the disposition, is subject to tax. Only on their operations are they exempted. This should have not been included in this preferential tax treatment because, guys, this was already discussed in your income taxation. And it is already provided under your income taxation before that you have your exempt corporations, which if in case it is connected into their ordinary course of business or based on their purpose, they are exempt. You all know that one already. But since it is included here, again, I just included all of the corporations or exempt corporations which are operating not for profit or they are considered non-stock. Just remember, any income for your purpose or for your operations is exempted. This is actually normal in all of the different exemptions from income. Only income from operations. As you can see, MNGOs, only income from operations is also exempted. BMBEs, only income from operations are only exempted. Clear? Okay. So that is for your exempt corporations. So for today or in this session, we have discussed several uh, preferential tax treatments. We started with your SC and PWDs, and then we talk about your BMEs, your SSMs and traders. We also talk about your MNGOs and your different exempt corporations. One thing is for sure, before you can claim any exemption or preferential tax rate, you must first be accredited, or there must be a certification showing that you are really exempt before you register. So before you register, as early as registration, you must show that you are really already exempted. But if you did not show that you are not exempted, you will still be taxed accordingly based on our normal taxation. Therefore, you must show as early as registration that you are exempted. As you all remember, the certificate of registration is a binding contract between the taxpayer and the government. Therefore, whatever taxes provided under the COR, if in case, let's say you are an MNGO, but you did not provide for any tax exemption under your COR, you're still liable for tax because your COR must provide there that you are exempt from this, from that, and what are your taxes. Okay, so I hope we are clear on your different preferential taxes that we have discussed this